Hello and welcome to another Forex Friday.
Shut up and take my money.
All right, just going to jump straight into it like always.
My man.
So starting off per usual with the DXY and of course the trade weighted index, but I'll get to that in just a sec. So DXY has had a little bit of a retracement after this huge tear we've seen. All the way from 104 to 110. Pretty crazy.
God damn!
But we've come back into this previous range high and this demand zone right here. I'm gonna label that so everybody knows. Yeah, so you can see with this wick right here, had a pretty meaningful reaction. Obviously, this candle is still live as the daily chart. So, who knows how it'll end up developing. But this is an area of liquidity to watch out. You'd want to see if we get some consolidation in here before an eventual move higher again. That said, I wouldn't be surprised if we saw a retracement all the way down towards this midpoint into this level. It'll be more clear on why I drop down to a lower time frame, but it is consistent with the actual midpoint, this demand zone. So there, that level of confluence. And one thing to keep in mind is, people might think that if the DXY drops all the way down to this level, that is, super bearish. That's a sign that this trend is reversing. But you need to have some context, because look at this long uptrend right here, right? We had a high, a low, a higher high, a higher low, and now another higher high. So if we are continuing this trend, we could go as low as this level right here, assuming we don't break below the actual low. And that would be consistent with this broader uptrend, this higher time frame, longer term uptrend. So this is why I don't think it's that out of the question to assume, or at least to think that this is possible, that the DXY retraces all the way down to this 106 level, maybe even a little bit further. But let me drop down to a lower time frame so I can show you exactly what I'm talking about. So this is the 4 hour, and you can see that we have this consolidation right around the midpoint of this range. And this is what led to this large impulse, eventually getting to the top of the range, and then another consolidation and impulse higher again. But you can tell there is a decent amount of imbalance here. I suppose this wick got, didn't fill it by any stretch of the imagination, but it got close, I guess. But you still have a lot of imbalance in this general area, and price has never come back into this midpoint to get any leftover liquidity or orders, or just fill that imbalance. So this is part of the reason why I think it's completely in play right now that the DXY would retrace into this level. So that is what I'd be looking at. I suppose if you want, you could feel free to take buys off of this. This isn't a terrible level, and the risk to reward might be decent if you base your stop off of call these low points. If anything, I might even try to enter on a lower point. Again, not financial advice, and I certainly won't be entering on that. I guess it's DXY anyway, so what does that even mean? But actually, now that I think about it, unless you trade like futures or something, you can't really trade DXY. So anyway, I'd be looking for just support, for confluence for other pairs like Euro USD. Watch to see if the DXY comes back down into this level, because this is the level that I have the highest conviction for right now for a pivot forward, because I still think that the DXY has a little bit more gas in it, mostly obviously because of the Euro USD. Euro, they're trying to find a good reason to buy the Euro right now, and with Japan still pinning yields while the Fed is getting even more hawkish, potentially committing to another 75 basis point hike, or at least 50 basis points going forward until the end of the year. It's hard to not see that interest rate differential driving JPY lower.
Totally.
So in that sense, DXY is, in my opinion, my base case, I guess I would say, is that it does continue higher, especially after having just made this higher high. So if we make a lower low and start pivoting, then the assumption would be that we make a higher high.
Yeah.
But on that note, let's transition real quick to the trade weighted index. So only goes to the daily chart, or has the daily chart or higher. So we can't really drop down to lower time frames, but who needs it? So we got this right here is the high that I've been talking about previously, and this is significant because the DXY previously, it had busted that high a while ago, not too long ago, but a while ago, and the trade weighted index hadn't yet pushed through that previous high, but it has now. And that's significant because, like I was kind of talking about DXY, we have made, you know, higher highs, higher lows, higher highs, higher lows, higher high, higher low, and then now another higher high. So that is showing that this trend, this uptrend, this higher time frame, longer term trend is still intact. So I would be assuming that it is going to pivot somewhere, maybe in this region, and then eventually make another higher high. Now, obviously, who knows, but I think the fact that it busted over this previous high is significant, just demonstrating that this trend is likely intact still. Doesn't mean we can't have a meaningful retracement. Again, we can get all the way down to this lower level before pivoting. Definitely be prepared for that. All right, well, that's enough of the DXY trade weighted index. Let's transition to the Euro USD, or Euro USD. I don't know why I said the.
You're a fucking idiot.
All right, so consistent with the DXY pushing, we had or pushing down, retracing. We've had the euro push up pretty high. I think it's like 2.5%, which is pretty meaningful. Yeah, 254, pretty meaningful move higher. I mean, I guess that was the high. It's obviously retraced a little bit. But let's go down to the lower time frames and see what we got here. So actually go down one more. So this is actually a trade I took, closed out, and so I'm just going to kind of walk through what I was seeing, because it technically, I mean, it wasn't a counter trend, but I guess it kind of is in a higher time frame sense, but I'll explain myself. So obviously we have this larger downtrend right here, right?
Yep.
And when you go down a little bit more, you can see that we have this high, we have this lower low, we have this lower high, and another lower low, and then we broke structure right here, right? Because this was the previous high that led to this low, and then price pushed up, made a new high, and then at that point you could safely assume that, you know, because you broke structure, you broke the high, the downward structure is no longer intact, that you are going to make a higher low and then eventually another higher high, which is exactly what happened. So whenever you see this, like a break of structure, your first goal is to identify the demand zone off of which it will likely pivot. Now that could have been somewhere right here, because this was the low, right? And this was actually the original impulse down here where this originated, because this is where we had this low form and then this large impulse up. And so I mean, really, this easily could have been a bad trade, and then it bounced off of this level. Also could have just kept going down.
That's what she said.
You never know, but I felt confident enough because I saw this right here. So you have this impulse, a little consolidation, kind of this rally consolidation, then another rally, and so price made that high, retraced into this level, got a little bit lower, but this is why you have like breathable stops, especially when the risk to reward is ideal, because this was still a 4-hour trade. So you have the entry around this zone right here, and you just target a new higher high. And so normally you could say like target this level. The reason I targeted so much higher was because of this right here. So we kind of have this this line of liquidity. I kind of labeled it right here. So liquidity line, and that's just my term for these kind of relatively equal levels that signal a lot, or like there's probably a lot of stops on the other side of these, right? A lot of retail stops, they put their stop loss right here. So when you have a lot of liquidity resting in these areas, especially when there's kind of like this imbalance, right? So you have this area right here, this zone where price dropped off, and then you had some more consolidation. So you have a little bit of imbalance in here that needed to be filled, right? And so my assumption was that price was eventually going to push up to bust through these levels and at least partially fill this level like it did. And so that's why I was targeting this line. I could have gone a little higher, but you know, I just tried to play it safe, and so this is why I was targeting that level. But normally you would want to just target the previous higher high, because that is what's consistent with structure. Then if I had done that, I don't know, I might have been forced to tighten my stop for this, so I actually probably would have gotten stopped out of the trade. Maybe it wouldn't have worked out, but yeah, you win some, you lose some, doesn't really matter. But hopefully that makes sense in terms of this trade idea. You know, I just saw this downtrend, I saw a break of structure right here, And as soon as you see that break of structure, you want to identify some sort of level of demand off of which price will pivot. Because as soon as it breaks structure, it's going to be looking to put in a higher low. Now that could have been here, could have been here. It ended up being here and working out. But either way, you just want to identify that level, right?
Yeah.
All right, so that's Euro USD. Let's jump to USD JPY. All right, something tells me this is going to be a little bit faster.
That's what she said.
Because I don't really care that much about USD JPY. In a macro sense, I really do. But trading, it's been an annoying pair to trade, to say the least. So maybe go to the daily real quick. So, I mean, crazy move higher, pretty aggressive. Would not be out of the question at all to see a retracement into retesting this previous zone. That I talk about this a lot. When you have a range and price leave that range, especially when it leaves aggressively, more often than not, I would say you see price come down into that previous range that it left. So this is the range, range low, range high. It's kind of the blue midpoint right here, identifying it. So this range right here, price comes down to retest, goes back into that range, and then comes back up. Maybe you get a retest right here, and then a continuation. And so that is what I would be looking for. Now, it's possible that it comes all the way back down into this area of demand. As you can see, we had this impulse above the midpoint, and then some consolidation, and then another impulse higher that eventually led to this actual high right here. So this level is definitely, it appears like an area of demand. So I wouldn't be surprised to see price come all the way down into here and then maybe making a move higher. But I still would be on guard for just a little bit of a dip below into this range and then a push higher. As soon as you see a candle, like after it goes below, it's getting kind of messy. Let me get rid of this. Whoops. So as soon as you see price go below this level right here, the previous range high, get a nice, a candle close below maybe, or even if it's just wicks. Although ideally I like to see a candle close below and then a push higher and a candle close back above. At that point, you could even market order in, I guess, but sometimes the safer bet is just to wait for a retracement, one last retest of this range high, and then the continuation to make a new higher high. And that more or less is what this order is kind of signaling. Now this would be kind of the maybe less safe approach, because when you have me having this order down a little bit lower is because I'd be trying to get in just no matter what. Just kind of if price drops down, I'm in. I don't know if I'm going to do that. Again, not financial advice. A lot of the things I talk about, I don't ever trade. I just do this for analysis. But so something like this, and then just continuation. And that would be loosely based on my longer term, I guess, assumption that JPY is going to keep devaluing relative to the dollar. So I'm confident that this uptrend is intact, and that's why I am not necessarily as concerned with a serious confirmation like this. But obviously that would be the safer approach. You just might miss the trade or maybe not get as good of a risk to reward. Who knows? But still, I could easily, if I did take this trade, I could easily get stopped out, because it could go into this demand level and then continue. So you always run that risk. And, with trading, there's always so many levels that it can bounce off of. You just have to kind of take your best guess. But that is what I'd be looking at for USD JPY.
My man.
All right, let's transition to what do we got next? USD CNH. Okay. So this is the Chinese yuan. For those who don't know, not really sure why they have CNH as the ticker. Never really made sense to me. Let's go down to the 4-hour first. Okay, so like all these USD pairs, we had a huge rally. We made this high. This actually looks pretty similar to USD JPY. And actually, I think I'm in this trade right now. We'll see how it goes. But so kind of a similar, like I said, very similar to USD JPY. You have this previous range right here. Price deviated from the range, left the range. It already kind of retested it, which, I'd prefer to have it just go like a hard rally, like just excluding this, basically just this green candle to this green candle, just straight line and then a retest like this. But still, I think it was still valid enough for me to be willing to take the trade. So we had this range, pushed above, and then we made this high. So my contention was that we were going to come back down to retest this range, pop below this level specifically, you know, basically run those stops, grab liquidity in, because it lined up well with this area right here. I'm not even sure why I drew this demand level. I'll have to drop down maybe a little bit further. Oh, I guess I based it off of this right here just to be safe, but realistically you can kind of base it off of this right here. So this is where the impulse started, so you could say this is an area of demand, and that's exactly where we kind of went into, right? Actually, I could even tighten this up right here. If you base it off of that last red candle, which, or I guess technically black, but red candle, which is generally a good approach for drawing zones. Yeah, lined up pretty well. I guess you have to use the bottom of this red candle specifically, but still lined up pretty well with this demand. We already saw a reaction, so definitely could have had a better entry, but doesn't really matter. I still think that this is a good sign because we had this reaction. We now are closing, have candle closes, only a few hours, maybe like, what is this, 1 hour? So like 3-4 hours of closes over this previous range high, which I think is significant. So I think a safe bet would honestly be pulling, like I might do this later after I get done with this video, push my stop loss up to this low, because I don't expect or want it to be making a lower low. At that point, I would say the trade is invalidated. But so basically, whoops, run the stop up to there, and yeah, just keep watching, because I think as long as you can hold above this line, there's a good chance that this trend is going to continue, especially because I think China's going through a lot of trouble right now, and they may have to get into easing while the US is still tightening. So that would obviously put more pressure on their currency and presumably eventually lead to another higher high, which is exactly where my target is. So we'll see. Obviously not a guarantee, but that is this is a very similar trade to the USD JPY one, just kind of lined up a little bit quicker. But yeah, so moving on. All right, what do we got next? What is this? Get this out of the way. Let's get to the daily chart. So this is the Swiss franc and Japanese yen, which I, for some reason, did twice last week, but we're gonna only do it once this time. I promise. Okay, so all these charts, I swear, look the same. This is kind of the nature of Forex these days. Is everything is correlated. Not even just Forex. It's the nature of markets in general. Like I find it funny how people keep, like, they constantly point to the correlation of like Bitcoin to nasdaq, but I'm like, everything is correlated right now. Like you can pick pretty much any risk asset, quote unquote risk asset, and it's correlated to the nasdaq right now. It's because when volatility and, you know, increases, or everything is kind of resting on the Fed and macro forces and policy, correlations start getting closer and closer to 1. And so the Forex is kind of in a similar boat, just because everyone, like, there's just so much craziness going on in terms of like inflation, monetary policy, and just everything coming together in under the macro, that you're going to see a lot of correlations in most markets. So keep that in mind. Don't fixate on individual correlations now, just because so many things are correlated. Right?
Yeah.
All right, so what do we got here? I'll probably try to speed through this one because it looks just like the last two. So again, just reinforcing this idea. You have this previous range low, range high, and we had this huge impulse up to make this new high. Now could still be moving to make higher highs, who knows, but I would be interested in seeing, a retracement to retest this previous zone right here. And if you drop down to a lower time frame, lines up decently well with this area of demand, right? Because we have these red candles. These are the last red candles that we have, and then this large impulse that led to this high. And so that lines up pretty well with this range high. So we get price come down eventually all the way down into this area, pull liquidity, and then continue its trend to make a higher high. All right. Yeah, honestly, that's good enough. I don't think we need to hammer in this point too much. Okay, so let's transition to the next pair. All right, so this one, it will look a little bit different. This is NZD JPY. So let's get to the daily real quick. All right, so now we've kind of gone a little far away from this level, but I still would be looking to it because I think it has a lot of signs that it's a potential pivot point. So you can tell that we had this low right here. Actually, let me back up a little bit. So obviously we are in a clear uptrend, you know, no need to fight it, just looking for opportunities to ride it.
That's what she said.
All right, enough jokes. All right, so we got this low right here. This is actually the real low that led to, I guess, this high. And then we have this low that led to this high. So go down a little bit lower. So based off of this low, what are the areas of demand we can be looking for? Now this is one. I suppose you could say this is also one right here. Base it from red candle to red candle. And this one from there to there, right? So you got these two areas of interest based off of this low, because if we're going to continue this structure, we wouldn't trade below this. If we did, it'd be a breaker structure, and then we might be looking for sells longer term. But we made a high, right? So this was the high, and now we made a new high. So we're looking to make a higher low. And one reason I like this area specifically is because it lines up really well with this right here, this liquidity line. So we had this impulse higher, slight consolidation, impulse higher, slight consolidation, then another impulse, and then we built up a lot of liquidity in this area. I mean, we have these lows that are kind of ascending, almost equal lows right here. So there's going to be a lot of retail liquidity on the other side of this level, this liquidity line.
Totally.
And what I would like to see is price eventually retrace to grab that liquidity, bust through this level to run all those retail stops and get extra liquidity, capture more leftover, maybe demand orders or orders from this level, this demand zone, and then start continuing or recontinuing its trend to make a higher high. Now it could get as low as this level. Obviously, I think this area of demand is in play, but just because this lines up, this area right here lines up so well with the liquidity line, this kind of built up liquidity right here, I would be eyeing that level specifically. So maybe whenever you have these zones, I usually try to target like the midpoint of the zone, and then we'll just have to stop right there and target a new high. And given this risk to reward is pretty aggressive, you could maybe, how far down can you go? Yeah, I suppose you could, you could do something like that to kind of play both zones, and that's still decent risk to reward. I mean, it's almost 4. So maybe that's the best bet. I don't know. I probably would just base it off of this myself, but obviously to each their own. But yeah, so just looking for some sort of retracement into this demand zone to bust through that liquidity and then continue this trend into a new higher high up past 87.6. All right, so let's transition to the next pair.
Woo!
What do we got? Oops, what did I do? Oh wow, skipped all kinds. What were we just on? Yeah, we're on this one. Okay, so next one. We are on GBP NZD. It's probably one of those pairs hardly anybody trades, but we're talking about it. So this is going to be actually similar to the last one we just talked about. And as you can see, we have this, here, I'll even label it for you guys. Another kind of like ascending liquidity line that lines up really well with this demand zone, right? So we have this area of consolidation that led to this impulse. Eventually, where's my drawing tool? So eventually led to this high and this high. And then we made these relatively equal lows. And continued this ascending liquidity, right? So people just keep probably moving up their stops, but we have, Actually, let me get a straight line to get a better idea of where this level actually is. Okay. So this is the level that I would be eyeing for price to break at some point. And what I like about it is price is already kind of toying with this trend line. So I would love to see just a trickle down or even just a big impulse down lower to bust this level, you know, this line right here that is lined up with this right here. So basically get through all of these stops based off of all these levels. So I'll grab all that liquidity, run the stops, and also just dip maybe a little bit below to capture any extra liquidity left over in this demand zone. And actually, I gotta get to a higher time frame. Now, I suppose we are technically in a higher time frame downtrend, so this would be a counter trend trade, but I still really do like the play just because, just in general, this setup, this liquidity line that lines up right above the demand zone tends to be a pretty high probability trade in my experience. So I would be eyeing this. I do like this as a level. Basically, this order panel says it all. Enter at the top of the demand, invalidation right below the bottom of the demand zone, and targeting a new higher high. So we'll see, because like I said, this is a counter trend trade technically. We're in a higher time frame downtrend, but I think we do have more room to go higher, just given that. So let's map this out. So we got these highs, we got this low, we have this high that led to this low, and we haven't broken this low yet. So I think that we could still be looking to pull liquidity from some sort of supply zone near this high. Now, the levels I would be looking at right here, and I suppose technically right here. Did it already hit this level? Okay, so now, whoops. Now I do like this level a little bit more just because it's closer to the peak, but oh my gosh, can I get the camera? Please work. Jesus.
You're a fucking idiot.
All right, so this is also a level. It looks like we already touched into this level, so that is potentially a cause for concern if this ends up being the actual supply zone that, whatever the next lower high is based off of. Because as you can see, we already kind of went into this supply zone, dropped down, and even had a lower high off of what looks like. Okay, so we had this shorter time frame or lower time frame counter trend, right? So a low, high, a higher low, higher high, higher low, higher high, and then you have this demand level right here that created, or actually this demand right here is what created that high that went into this supply zone. Now, if we put this all the way across, I guess it worked for this one, but then we busted back into this level. So I guess long story short, it's complicated. I don't have serious confidence in this being the high, just given that we still have all of this right here that wasn't really tested. There's a lot of potential orders selling liquidity that's left over in that area. So I still think that there is a lot of room for price to drop down into here and continue into this level before eventually heading lower, part of this broader, longer term downtrend. But yeah, I don't know. Price is messy. Take everything with a grain of salt.
Totally.
All right, let's transition. What do we got next? So, Euro and Swiss franc. All right, what do we got? 3-day? We don't need that. So, let's backtrack. Let's actually get a little bit lower. All right, so we're on the 4-hour chart. Now, we had this previous range right here, right? This range. And now this is the bottom of the range, and as I say often, I always look for a retest of that range. You can say we didn't really get it. I mean, you could say we maybe got a little bit of a retest of the supply zone that was part of this range low, that being this right here. Let me get my this area right here. You can kind of see like these wicks that basically touched into this zone right here. But I still wouldn't be surprised if eventually we do see a retest of this zone to pull more liquidity from this supply area. But in the meantime, let's walk through this. So we got this high, got this low, got this lower high, we got this lower low. And as you can see, so we had this low, right? Then we made this lower high, and this area was an area of demand. So you can see we had a pretty aggressive impulse from this level. I mean, shorter time frame. This is a 4-hour chart, so this still is a pretty aggressive impulse. The clear demand level right here, and then price broke through it, right? So we made that high, and then we broke through it. So this realistically can be turned into supply now, because this demand wasn't valid. It didn't end up holding up price. We had this huge impulse down, and so we have this area right here. And if you draw this all the way across, you can see, look how well that lines up with this high. So we had this demand. You can even include that red candle right there. So we had this demand level that pushed this up. Price came back through, didn't hold that demand, and so this demand turns into supply. And if you follow that supply zone, you get all the way to this level, which is exactly where we pivoted. So clear sign that that was in fact a supply zone.
My man!
Actually, let's drop down a little bit lower. Oh, where are we? Yeah, so pretty much right in that zone. I mean, barely wicked beyond it, but you can tell that immediately just came straight back down. And now we have, let me go a little bit higher again. So we can kind of apply that logic to this current price action right now as well. So we had this counter trend, right? Because we're still in a longer term downtrend. And we have this counter trend structure right here. So a low, high, and then, you know, you get it. We're going to make higher lows and higher highs eventually until this point. And what did we have? We had a demand level right here. And that is what led to this high. And then price came back down into that demand level, didn't hold, went right through it. And then what do we see? Price comes back into that demand that was turned supply and falls further. So same thing. You basically find the demand that led to the high, price busted through it, didn't hold, that demand shifts to supply, and then we get price come back up into it, pull that liquidity, and then continue that downtrend. So pretty, I mean, it can be a little bit challenging to identify this stuff sometimes, but hopefully this is helping a little bit, because this concept you will see pretty often. I mean, just looking at this chart, I've already been able to point it out twice in just the span of, you know, just scrolling. So it does happen pretty frequently. And so now let's apply that to what we're seeing now, if we can. Let me get rid of this. Okay, this is not what I needed. Get the fuck out of here. Sometimes trading view, I swear.
Little bitch.
All right, so now this, we don't really have the same kind of I guess structure to base this off of, like a future trade off of, but we do have this level right here, obviously consolidation, impulse, and this level. Now I'd probably base it off of the consecutive green candles, the last consecutive green candles. That's how I often base my zones. So you can see this green, that green. That's where I would base the supply zone off of. Obviously, if it was demand, it'd be the consecutive red candles. So we got this supply zone right here. That could potentially be a good selling opportunity. Now, like I said, it's not quite as, you know, high conviction as this one, just because we had this high that immediately broke structure. So usually when you have the first break of structure, that is maybe the best time to enter in on your sells, just because there's, you know, more downward movement to occur. Like you have more time for that trend to develop, whereas after it already develops, you've already put in a lower high, another lower high. The likelihood of a consolidation or reversal is higher. So the further down you go, the less likely or the lower conviction you can sometimes have. But still, this is an area I would be eyeing right here, this zone, or even a return back to, I guess, this whole region right here. Maybe not quite this top supply zone, but I'd still be eyeing these levels. Not with the same conviction as these trades, but still, I guess we're done here. We're done here. Let's transition to Euro AUD. All right, what do we got here? Okay, so switch to the daily. All right, so clear higher time frame downtrend, and we have some counter trends, right? So you have these highs, part of this big downtrend. You have these highs right here, but you have a lot of counter trends within those. So you make a low, and then you start making higher lows and higher highs that lead up to the ultimate high that is still a lower high in the grand scheme of things right here, right? So this was the high. Let me drop down to 4 hour. We'll go through this whole thing. Okay. Whoops. Okay, so you can kind of do a similar to what we were talking about just in the previous pair. So we had, this area of demand, right? Because we had this minor consolidation that led to this huge impulse that eventually led to the high, and we had price come back down into it and eventually break through. So that demand turns supply, and this didn't really line up. So you could base it off of this one. I think you can tell it went a little bit higher right here before falling. So you can also, it gets tricky. You could base it off of this. Normally I base it off of the more recent price action. So you can kind of keep this as your lower bound level, and then I would have this as your higher level. So the actual more recent price action where you kind of see this huge drop off, you can just have like a huge, you just make a bigger zone sometimes if you're unclear or unsure, and then you just target the center of that zone, because this is obviously a pretty large zone. So whenever you have that happen, you just take the midpoint of it, have your stop be pretty much the same, or it would be just invalidation above the high, and then you target a new low, right? And this isn't quite a 3R trade, which is usually the minimum I like to shoot for. But whenever that happens, I just roll my entry a little bit higher, and there you go. So this would have been pretty ideal had you based it off of this whole entire range, just because it is a little choppy, even though you could be looking, okay, this is the area of demand that led to this high, and then when price retraced into that area of demand, had a little reaction, but eventually just fell through. And so this demand level turns to supply, but you see this price action right here, especially this area right here, right? Because this is kind of an area of supply in itself. This is a huge red candle. So you could, actually, I wonder if you based it solely off of this, what it would look like. Yeah, pretty close, even if you just based off of that. So this is kind of being fractal. You get further down to time frames, and I bet you if you went down even further to like the 30-minute, you'd probably see something better. But you could have based it off of even just this level right here. So this is the the new supply level, and it would have worked out well. But either way, however you view it, you could still take this trade successfully. You just have to have like kind of different approaches for either. Like when I have smaller zones like this, I would have the entry at the bottom. And it's kind of weird how this lines up perfectly with that actually. But when you have these large zones where you're like, well, I can't have my stop be that big and enter at the bottom. So you just put your entry towards the midpoint of this large zone, and then just, business as usual. Just target the making a new lower low like we did right here, and stop in the same place. But yeah, so let's keep fast forwarding. Okay, yeah, perfect. So let me get rid of this. All right, so you can tell we came right back into this level again to retest it. So even if you missed it the first time, you can get it one more time.
My man.
Here, let's see what this is actually based off of. So now you could base it off of, so where was the, I mean, this is kind of a trickle down. Usually I like to base my zones off of like large impulses, but so, you know, conviction would be, like, I guess, a little tempered right now for this one, but base it off of the last high, right? So it actually busted above this high. So this high right here. So I would probably base my zone off of these green zones, or these green candles, I mean. I guess you could base it off the last green candle, because this is technically, I don't know, when it's a doji, I would just consider that whatever color is consistent with the one before or after it, because, you know, this could easily be a green, even though technically it's red. So if you're including all the green candles, this green candle to this green candle, or I guess that one, so that would be the zone, and that's exactly where we reacted off of. So pulled in here, and then we had this pretty precipitous drop, so pretty aggressive. Now let's keep that going and go down a little bit further. Where are we at? I always hate how TradingView does that.
Little bitch.
Just loses everything. Like, where am I? Okay, yeah. I feel like we're on a different pair right now. I don't even know what I'm looking at. All right, so I'm just gonna start talking about what I see. So price right now has broken structure in this counter trend a little bit, and we made this high, right? So we broke over this high, and now I think there's a lot of liquidity right here that I would assume price is going to target. So at some point we're going to push back up above this level to grab all that liquidity. Just imagine that's a straight line, and we could go as high. Let me see if there's any supply zones that line up with this. Now we already have this. We already kind of like triggered this one. I guess you could base it off of this level, and the reason why is, again, back to this whole demand flipping supply. So if you base it off of this right here, so this last red candle that led to the ultimate high, so this was the area of demand. We had this large impulse, price came back down into that demand level, and then eventually just fell through it. So that demand turned supply. So that is an area of interest that we would maybe be looking for price to retrace up to next. So come all the way back up to this level and then dip down for an eventual lower low. Now that risk to reward seems pretty wild just looking at it. So you could probably have a pretty roomy stop if you wanted. Obviously you can just take the risk to reward too, because that would be pretty nice right there. Yeah, so whenever you have that opportunity, because you have such a high risk to reward, always look to see if you can like, I don't know, to make sure you don't get taken out of the trade, because you would hate that, especially knowing that you had so much breathing room based off of your high risk to reward. So if you look at this level right here, you can even base it off of this whole zone. So instead of basing it off of this previous like demand candle, kind of use the more recent price action where you had this high that was based off of that demand, and the low that was also based off of that quasi demand. You could even include this whole level right here, right? So from this low up to this high. Now it definitely complicates it a little bit, and this actually kind of works out pretty well, because your midpoint, your entry could be around the midpoint with your stop loss still the same level. And actually, if you push this down, not too shabby. So you could still have a 4-hour trade with targeting the bottom of that zone. So either way, doesn't really matter that much how you play it. It's more about the idea of identifying that this area that was demand. Actually, I'll just leave that. So this area that was demand, that had this huge impulse leading to a high, retrace, didn't really find support in that demand. And so this demand level right here shifts supply. So you could really base your targeted entry off of that level, and even just have, so say base it off of that. There's your potential entry right there. If you really want to be like very specific about that, that specific area of demand that flips supply. But to each their own, doesn't really matter. just being able to identify this as the high and then looking to find where the supply level based around that is, because price is likely to retrace to that level to grab all that extra liquidity, especially given this confluence that I see right here of this kind of like ascending liquidity line of these, a lot of these, not equal highs, but close enough where there's just a lot of liquidity almost certainly resting over here. And so I would not be surprised in the slightest if we end up busting this high to fill this gap and jumping into this area of supply. All right, well, I think that's enough of Euro AUD. Let's transition to, what is this next one? Euro GBP? I don't even know. Yes, Euro GBP. And we're gonna try to pick this up. I think the last one, I'm saving the best for last, so don't worry, it's gonna be a good one. But we got, I don't know, a lot of this stuff is very similar, so yeah, I won't take too much time on this. This is probably pretty self-explanatory at this point. So we have this area of demand right here, right? Whoa, that's not what I said. Okay. This area of demand right here led to this impulse, and then we started building up liquidity in this area. So we made a low, and we made some, more highs, and then we came back, and we have these relatively equal levels right here above this demand zone. So what am I looking for? I'm looking for price to come back down into this level, to bust through these levels, to bust through that liquidity and retest this area of demand that it hasn't gone back into. Because we had this big impulse, that led to this area right here, or this high, and eventually this high. So this whole region right here that led to this high. But we have never retested, or we haven't retested yet, this level in here, this level demand. So that is what I want to see. I want to see price come back down to bust through these levels and into this demand before eventually making, you guessed it, a higher high. All right, let's transition, making it quick. Don't worry. Okay, so this is Euro Yuan, Euro CNH. Okay, so we got this high right here, right? And that led to this pretty big impulse down, right? We have this, it's kind of hard to tell. This is a daily candle, so even bigger impulse than it probably seems like. Actually, let me go down to the 4 hour. Okay, let's do the whole thing. Okay, so this is the 4 hour, just honing in on that specific area. So we got this area of demand, or supply, rather. Excuse me. All right, so we got this area of supply right here, and basing this off of this green candle. So I can even tighten this to make it more obvious. So this is the last green candle or meaningful green candle that led to this impulse down. Now you could, like we've been talking about, base it off of this actually. So you had this area of demand that would be flipped supply. In this case, didn't exactly work out. You definitely would have lost that trade, as you can see. This is why I think when you can base it off of more recent price action or the higher level, because that is the safer level, because you're assuming it's not going to make a higher high, right? But oftentimes you do see those levels work out for you. So, use them in your toolkit. Don't rely on them single-handedly, but, keep that in the back of your head. But anyway, so we had this impulse down, or this large move down that made a lower low right here, right? So we continue the structure, right? We broke actually I can probably use this one right here, right? So if we zoom out, this was the low, and we had this high, and then we broke through that to make this lower low right here. And then what we're looking for is a lower high, and that is where this level comes in, because this was the previous high, right? I guess this too. And now honestly, I didn't take this trade or anything, but had I been looking at this, I would have been a little bit concerned about these equal levels right here, because that is just asking for price to push through. This is a classic liquidity line. So my My confidence would have been low if I was looking at this trade, even though I'm thinking that it is going to make a lower high, which is, that is what happened. But just given that we have these like basically equal levels, I would have assumed that price would have, pushed up just beyond to grab that liquidity and then continued lower. But obviously that's not what happened. But still, whenever I see that, I usually have a little red flag in the back of my head that like, oh, maybe don't take this trade. But anyway, so you have this high that eventually led to this low, and this was the last meaningful green candle that led to that low. So we, had the high of the green candle, low of the green candle, and pushed that supply zone over. And what do we see? We see price come back in to make that lower high and eventually push down to make a lower low right here. So now what are we looking for? Another lower high. So when we're looking for another lower high, we want to identify another supply zone off of which price would pivot. So based off of price action, now obviously you can always base it off of the actual high, but if you're not seeing anything obvious or clear, you can look to other levels, which is kind of what I'm looking to right now. So this again gets back to the demand that flips supply. So we have this area right here of demand that led to this impulse that led to the actual high. I mean, it was still a lower high in the grand scheme of things, but this is the high of this counter trend, right? Because we had this low, higher high, higher low, higher high. Wait, actually that's not higher, but this one, higher high, higher low, higher high, right? And this was the demand level that had the impulse leading to that higher high. Price retraced, kind of found support in that demand level, and then eventually just shot back down, broke through it. So that demand flips supply. So you can keep this mapped out as an area of interest for price to potentially return, which is actually similar to where this order is. Or you can, because again, you want to base it off of the most recent price action, help make things a little bit more accurate, I suppose. So we could base it off of this impulse right here. So we have this kind of region, I suppose. You can even maybe base it off of this last green candle if you want, but I would, just to play it safe, include this area of demand, right? So push it down to this red candle to include that demand that flips supply, but you're also including this area right here. That way you're, can maybe more accurately place your stop loss. So given that, we've created a more generous zone that will be safer, but now it can affect your risk to reward. Doesn't look like it's going to be actually that meaningful, just given how, yeah, this seems pretty good. So obviously targeting the lower low, and this is actually pretty good. I mean, even targeting or entering on the bottom of this zone as is, it's still almost a 5R trade. So that is pretty good. I mean, obviously you can move your entry as, per your discretion.
My man.
But, as it stands right now, pretty decent. Actually, let me get that back. So yeah, this is what I'd be looking for, because we are still in this downtrend, right? Continuing this bearish structure, and this is the high that we presumably will not trade above if we are to continue the structure, which is the base case. Now, you could try to find some sort of level right there, although that really does line up with the previous level of supply, that high. But I think I would be focusing more on this area right here, especially because you have this big consolidation that led to another impulse. So this is the zone I would be eyeing, and this is roughly the order I would be considering. Again, not financial advice, just considering. All right, and save the best for last. Woo! So what do we got? We got Euro NZD. Now, why is this the best for last? Well, because it is just probably one of the most textbook examples of just supply and demand working really, really well. So I'm going to drop down to the 15-minute, and there's just so many examples. So this one, you wouldn't really have that much confidence probably to take, just because the trend was down, right? But you had this area of demand based off of this red candle, right? And you could say that we broke structure right here. It's a little bit iffy, just given that this is potentially the high. I don't know. And then, again, that's why I say the conviction maybe wouldn't be there. But you break structure, and then you look at this demand level. You're like, okay, well, if we broke structure, this is where we're going to grab liquidity to continue to make a higher high and put in that lower low, or that higher low. And that's what happened. You can see this perfect wick right here. I mean, this wick dipped down almost perfectly into that demand zone right here, and then made that higher high. And then we did retrace. You could say this is a demand level. Never ever really got retested. We just kept this strong bullish trend going. But sometimes you miss it. Not every single demand zone gets retested. But you keep going forward. You see this new level of demand created, right? So the last red candle, and then we had this huge impulse that led to this high right here. We have a retracement. Dips right back into this zone perfectly, wicks, no candle closes, keep that in mind. It's just perfect entries basically. Wicks into this level, and then we make another higher high, busting through this level. So as an example, that would be this right here would be a pretty amazing risk to reward. So right there would have been a good 7R trade, basically a solid 7R trade. Minimal drawdown. I mean, these are 15-minute candles, and you also have to keep in mind the candles never even closed in that zone. It was just all wick. You know what I'm saying?
Totally.
So we continue this trend further, make a new high, and this part gets a little bit messier, but still tradable. So we have this demand right here, and you could have based it off of, so this is also kind of a demand level, a little bit quasi, and then you have a lot of chop in here. And so this ultimately ended up being the demand off of which a new high was made. But as you can see, it is a lot messier.
For real? You fuck with that?
And so not ideal, but still, you have this large impulse, right? So this is the last red candle that led to that large impulse that made the ultimate high, which is technically this wick right here. And what we do, we came back into this level, didn't trade below it, didn't make a lower low, and pushed even higher to make a new higher high up here. And then we have one more time. I'm telling you, this is kind of a crazy example, just how consistent this was. You could have traded this pair for like 2 days straight, just with like 100% win rate.
Not crazy.
But anyway, so we have this last red candle right here, right? And that led to this high right here, a new higher high. So let me start marking this up a little bit. So this was the high, this was the low. Oops, it's a little bitch one. Okay, so and then we have another high made right there. And so we're looking for a lower low. And that's why I drew this zone right here based off of this last red candle that had the impulse that led to that high. And what did we do? We retraced perfectly into this level. And we continued, made a new higher high. So this is the low, new higher high. And now you could have kept this going, and you're like, okay, well, here is the demand zone, and this is fine. Eventually you're going to lose, right? That's just how trading is. You can't realistically expect a 100% win rate. So this is your level, right? This is your demand. And what happened? You broke through right here. So this is the break of structure. This is the low, right? The low that we would assume not to trade below for continuing the structure. So what happened? We broke below it. And now we would be bearish. We'd be looking for sells. So we try to find some sort of level. So we had this high, right? We came back down into this area of demand and pushed higher, and then eventually broke structure. So you could base it off of like this level right here, because this is the impulse. So now this is the area of demand that led to the high, and so you could say this demand flip supply, but that isn't always that reliable. It's kind of hard to say. You kind of have to exercise a certain degree of discretion and identify when it's more appropriate to use that demand flipping supply flipping demand strategy. But in this case, I would say no, just because it was too low. We didn't really have price action develop. Now, if price busted through this level and just really kept going and then started retracing, I would say it's probably more valid. But because we had a lot of chop around this region and we didn't really have a meaningful deviation or move below, I wouldn't necessarily use this as a reliable supply zone. So that is why in this instance specifically, I would look to this area right here. Now you could also base it off of even this level right here. See this green candle, but you can tell we kind of mitigated that and captured the extra liquidity with this wick right here, because we dipped into this level. So all those leftover orders probably got taken by this wick, right? And so this is the new supply zone we'd be looking at. And that's kind of what we saw here, right? Not quite as pretty, because you had this consolidation, little dip, consolidation, and then a kind of trickle down. But now we have another supply zone right here. So this is the last green candle. Kind of annoying when you have these large green candles, because it creates a huge zone. Because, you know, what do I always say? When you have these large zones, you just take like the midpoint just to play it safe. Now, obviously, that would not have worked for this trade, just because it barely wicked into the bottom. But, whoops. But, you know, it is what it is. So we pulled from this area of liquidity, right? Continuing this downtrend, had a decent amount of wicks up in here. And now we are still in the process of, I'm assuming, this downtrend. Now, I have this order here. I don't have an order in, but this, especially because this is a really messy zone, I think it's very possible that we trade higher into this zone again, especially because we barely even got into it. Maybe if you drop down to the 5 minute, you can even see, yeah, nothing crazy. So I don't know. This isn't quite as neat as the beginning part of this, unfortunately, but still could be looking at this level right now. I had this order here for a reason, just because it was an area of interest. I don't think I have enough conviction in this specific messy price action to take it short, but also I don't think the risk to reward would be that decent, especially if you're just targeting a lower low, because we take this right here. This is our lower low. What is our risk to reward? Yeah, 2.57. I guess you can move this up to the halfway point, maybe even give this a little more breathing room above that high. So you could do something like that. I feel like that would be a little bit more ideal, a little safer. But I still, like I said, don't think I have the conviction necessarily, just given this messy price action. There isn't really a clean, well-defined supply zone. So, but yeah. Anyway, the beginning part of this is what I really wanted to emphasize, just because sometimes trading really is just that easy. You can't overcomplicate things. I mean, this is as pretty, you know, as it gets, as simple as it gets. You just have these basic demand zones. Price comes back in. I mean, you hardly have to deal with any drawdown at all. You get almost perfect entries. You know, you make a new high. I mean, it's just, it really can be that textbook. I mean, look at this. I mean, it's almost like you predict the future.
That was easy.
You just have your entry right there at the top. You could even have your stop right there. You target that new high. Boom. That easy. And it happens so many times. I mean, look at this. This is probably one of the cleanest ones right here. Just a perfect entry, and then makes a new high. This one's a little messier, but you can still kind of see it right here. This last red candle, just wick to wick, right? Has a pretty large wick into it to grab that liquidity, and then continue on to a new high. And then, you know, as soon as you see that break of structure, then you start switching your approach. You're like, let's look for sells, and that's when you start seeing this level. But again, the sell side of this has not been as clean, unfortunately. So it's a little bit less fun, especially for, you know, analysis and teaching, I guess. But yeah, bottom line, trading really can be that simple sometimes. But that is unfortunately all I have for you today. So on that note, wish you to stay happy, humble, and most importantly, solvent.
And we say bye-bye.